Let me start by something very uncomfortable, but it's so true. Most of the people in credit card debt are actually doing what they were told to do because they are paying the bills, they are making the minimum payment, and they are paying it on time. And that is why most of them are stuck. So you will ask, why? Today I want to show us two most important ignored things about credit card debt that most people don't pay attention to, but this is what is making the debt to be sustainable. In which way? It is making the loan to be prolonged and it is earning the bank more money than you ever think. To begin with, we will start with the interest rate. So most of the time you will be told that you take it, for example, you get 3000 USD at 25% interest rate, right? And then it's annually. You do your calculations and you see it as a small money. You see it as just a small extra cash on top of the 3000. But most of the time we ignore the compounding effect of interest. Interest has a compounding interest. Now let's make this simple. Interest is the rent you pay for the borrowed money. Example, if you are using someone else's house, in a month, you always have to pay the rent, right? And as you are paying the rent, there are some other things you're paying for that same house that most of the time you may not actually give consideration to when you first move in. And what are those? Your utilities. You have electricity, you have water, which if you're not considerate enough to ask about the bills and to ensure that the moment you are moving into that house, they are all at zero, you will pay things that you're not supposed to pay. We don't want to measure so much into renting a house, but I want you to understand the concept that interest is the money you pay for the borrowed money. You get it? Most of the time we know that the longer you take, the more rent you pay, right? If you're going to stay in that house for 6 months, you're going to pay it for only 6 months. But if you're going to stay for 1 year, you're going to pay the rent for 1 year. The same applies with the credit card debt. The longer you stay, the more interest you're going to pay. And one thing which most of us are not told about this interest is the interest rates are always high. Yes, they are always high. And two, they are compounding in nature. And three, they are compounded daily. Meaning, the longer you carry the balance, the more you pay. Interest doesn't bite fast. You won't see it on your first attempt. Interest comes slowly but legally. Most of the time, we think that when you make a payment towards the same account, then you are actually dealing with the debt. But we forget that there was an interest rate placed on it, and daily compounding effect of that interest is going to impact how much you're going to pay at the end of the day. So you really need to be careful that you don't carry your loan for a very long time, because the more time you carry your balance, the more you're likely to pay. So you will ask me, then that is not fair. Yes, it is not fair because you borrowed time. You didn't want to go and work and earn that money within 6 months. Instead, you got the money instantly. Two, you borrowed the money. It is not yours. This is someone else's money. So you have to pay it back with interest. So every time you're trying to make a payment, have in mind that you will be paying the interest rate as well. That's why most of the time, someone is paying the loan from the credit card debt, but they don't see it moving at a very fast rate. That is because maybe you're following the minimum payment, and two, you are forgetting that the money you are paying is not going all into the debt. Some of it is going into the interest, and probably that's why you keep on saying, I have been paying this loan for a very long time, but I ain't seeing it moving. It's because you're paying the minimum amount, and so most of it goes into the interest rate rather than the premium, which is the debt. Now let's understand the definition of a minimum payment. A minimum payment is the payment set with whichever bank gave you the card. They will tell you that you always have to make this amount of payment every time, right? And so most people always depend on it. Whenever they take a credit debt, whenever they use the credit card, they just want to ensure they pay the minimum stated amount. And that is an illusion, because the more you're paying just the minimum, you feel as if you're responsible. You feel as if you're progressing, but that is not the case. The minimum payment is actually meant to keep you in the system. It is meant to ensure that your account is always active. And it is meant to give you an illusion that you are responsible. This minimum payment, most of the time, it only covers the interest rate. Yes. And it is meant to reduce your debt at a very slow rate. And you will ask me, why? Because banks earn when you take loan to make the payment. The longer you take, the more interest you will pay, the more the bank will earn. And that's why in my first video about credit card, I say that the bank rewards timing. The bank rewards usage and not wisdom. Now here's why most people get trapped in paying the minimum. One, because once you've paid that, you feel like you're relieved of the stress, and then you no longer feel guilty. At least you made some payment, but you should ask yourself, yes, you made that payment, but what was the cost? At what cost was the payment made? That alone is enough to tell you that minimum payment is not to eliminate debt, but it is to minimize anxiety. It is to minimize stress. So you don't feel stressed because you just made a payment, but the debt is still there and it's actually growing daily. It's being compounded each and every time due to the interest rate. What really happens when you pay the minimum? One, you normalize debt. You even now have a budget. Your budget has a location of debt. And with this, debt becomes a monthly subscription. You lose your freedom of choice. You ain't flexible enough to add into your savings, to add into your investments, because you have a loan you're trying to pay. And most of the time we fail ourselves by adding more. We claim we are trying to help ourselves, but at the same time, we are adding more debt using the same credit card. So how do we help ourselves? One, we need to stop adding new charges into the same card. Try and live within your means. Try and balance your income. Try and live within your means. Two, always pay more than the minimum, because the moment you only pay the minimum, the interest is still increasing and the real debt is actually being reduced at the slowest rate possible. So try and pay above the minimum so you can counter in the interest and you are able to pay this within a short period of time rather than making it a long time paid loan. Third, start with the card with the highest interest. Why? Because if the card is at 40%, then it means it's yielding more interest. It means you are meant to pay more in that than the others. So start with ones with the highest interest so that you can be able to minimize the amount of money you will be paying as you try and clear off the debt. And lastly, automate your payments so that when it comes in, the loan is automatically deducted each and every time. And so you are able to have back your flexibility, have back your choices. So you are able to live a normal life without having to stress yourself about the debt and to have an increase on the debt you took. Remember, the goal is not to feel good about payment. The goal is to end the relationship. So let me leave you with this truth. Interest is not the enemy. The bank is not the villain. Ignorance is expensive. The little you know about the card you're using, the more problem you get yourself into. Credit cards don't grow because people don't pay. they grow because people don't understand how the system works. And so, educate yourself, know how it works, and you will avoid the credit card problem. Thank you for watching this video. Stay blessed by the best and see you in my next video.